Good evening, students. I am C. Ankit Sharma, your income tax faculty for today's session. So today we will be discussing the provision of our last head of income, and that is income from other sources. In comparison to other heads of income like salary, PGBP, house property, and capital gain, this is comparatively easy because there are very few provisions, and let me tell you, not complicated at all. So those does not fall in any other head of income and is chargeable to tax, is going to be taxed under income from other source. So as you have seen that in case of other chapters, there are a specific charging section which explains which kind of income is going to be included in which heads of income. Like if we talk about income under the head salary, then it includes that kind of income which is from an employer to an employee. So that kind of income does fall in the heads of income under the head salary. Clear? In the same way, the income from house property, the charging section is 22. The income under the head salary charging section is 15. But income under the head house property charging section 22 explain that there are certain conditions if there is an immobile property and if you are the owner or deemed owner, and if you're receiving rental income from it and which has not been used for business purpose, so that kind of income is going to be included under that income from house property. So on, PGBP explain that if you earn any income directly, indirectly, for carrying out any business or professional activity, or even not carrying out any professional or business activity, that is going to be included under the head PGBP. In the capital gain case, there should be a capital asset and there should be a transfer. So if these two conditions has been fulfilled, then capital gain is going to be come into the play, and you have to charge that income under the head income from capital gain. So you can see in all these heads of income, there are specific provision that which kind of income is going to be included in which head. Like salary head of income, in which there must be an employer and employee relationship that cannot be fall under any other head of income because it does not satisfy the condition of section 15. Because if there is an employer employee, the income is going to be taxed under income under the head salary. So these four heads explain which kind of income we are going to charge. But income from other source, the charging section 56, it says that if any income which does not include in any other head of income and is chargeable to tax, then that is going to be taxed under income from other source. So वो हिंदी में कहते हैं ना, जिसका कोई नहीं होता उसका खुदा होता है, वैसे ही है that if the income cannot be included in any other head of income, then that is going to be included under the head income from other source. Okay. So good evening, Soumya. Good evening, Tanu. Good evening, Almas. Astha is asking on query portal. Sir, in CGAS, can we deposit more than 10 crore? You can deposit. But in case of section 54 and in case of section 54F, in that situation, the investment value for the purpose of taking the exemption will be taken maximum 10 crore if the condition has been fulfilled. So even you can deposit 12 crore or more than that, but for the purpose of exemption, we will consider only maximum 10 crore. Okay. Why you are asking about capital gain provisions? Sir, in 54F, capital gain chargeable that is previously exempted will always be long-term cap gain if violated provision after 1 year. Yes, exactly, because in section 54F, it has been specifically stated that there should be a long-term capital gain other than residential house. And if you are going to purchase a residential house or construct it, you can get an exemption. So if you violate the provision, the previous gain is going to be taxable. That would always be a long-term capital gain. Rebate is allowed only, rebate is not allowed from 112A Astha, it is allowed from 112 and 111A for the purpose of your September and January examinations. Okay. If there is any problem regarding capital gain, so I have told you in the last session, students, that we are going to have a problem session specifically for capital gain and income from other source concepts. And that would be on 5th of June. So please, if there is any problem regarding capital gain, etc., we are going to cover test your knowledge question there, some more questions and your queries. Definitely, we are going to cover all those things in on 5th of June, 5th of June. If there is any interest, that is going to be taxed under income from other source. So you can see which kind of income is going to be taxed under income from other source. For example, if you are earning interest from saving bank account or interest on FDR, so your interest on FDR and interest on saving bank account cannot be taxed under salary head, cannot be taxed under income from house property, cannot be taxed under capital gain and PGBP. So where it's going to be taxed? It is going to be taxed under income from other source. Now I want to ask a very simple question. In which assessee the interest is going to be taxed? Under business head, is there any assessee for which interest is going to be taxed under business head of income? If yes, which assessee we are talking about? Is there any assessee for which income from interest is going to be taxed under PGBP head, not under income from other source? Ishan is saying financial institution, correct. Banks is the, of course, very simple example of it. So banks general working, ordinary course of working is to provide loan, etc. So the primary income of bank is interest. So interest does not mean that is always going to be taxed under income from other source. No, we did not say that. We said if there is any income which cannot be charged to tax under any other head of income, that is going to be taxed under income from other source. But there are some specific incomes also, which is going to be taxed in every case under income from other source, like dividend income. So in case of investment company, there might be a possibility that you might be thinking that dividend should be taxed under business head because they are dealing in this kind of activities. But dividend has been specifically included under income from other source whatsoever is the assessee business. So there are these kind of income we are going to discuss in this chapter. Other incomes are those which cannot be included in any other head of income. So what is the basic things what we are going to discuss in this chapter? I have just make a chapter overview for all of you. What we are going to discuss in this chapter one by one. We are having some specific provision regarding deemed dividend. So this word you must have heard in capital gain topic also, that is deemed dividend. So there are certain dividend which going to be treated as your income under income from other source under section 222A, B, C, D, E, and F. So what are these cases? These we are going to discuss. Then gift provisions are very, very important, whether it's a monetary gifts or it's a non-monetary gifts. So gifts are going to be taxed under income from other source in specific conditions. So these provisions we will going to discuss in this chapter. And a very important and recent amendment regarding this topic, that is sum received under life insurance policies, etc. So if you receive any sum under of a life insurance policy, those not exempted under section 1010D. So what are these cases? How we are going to tax them, etc. So a huge provision regarding this in this topic we will cover. Income exempts under income from other sources. So there are certain incomes which covered under income from other sources but which have been exempted, like compensation received on disaster, MP, MLA, some specific allowances, rewards, etc. So what are these some examples of income exempted under income from other source that we are also going to cover in this topic? casual income is a term you might have heard multiple times. In last session of capital gain, we have talked about it, and might be this term you must have been gone through in earlier chapter also. So what are these casual income? What are the concept of taxability? What are the provision regarding it? That is also going to be discussed. So this is a very small topic, but again, very important. And there are certain expenses which are allowed and disallowed under income from other source also. So if you earn an income which is going to be taxed under income from other source, so there are certain cases in which you can claim some expenses and there are certain expenses that is disallowed. So this is more likely like PGBP provision. Like if you did not pay TDS, you cannot claim that expenditure. If you have paid cash expenditure more than 10,000 in a day or 35,000 in case of a transporter, that is disallowed, etc., etc. So these kind of provision has been incorporated in this income from other source also. There are more provision, but these are 6 main and detailed concept of this chapter, which we are going to discuss one by one. Okay. I did not upload the notes of income from other source yet. After the class, I will upload them. Okay. Before starting the class, as usual, let me share you with thought for the day. And this thought for the day says that success does not come to you. You go to it. What does that mean? That means you have to work for something. If you want to achieve anything in your life, you have to do hard work for it. So success will not come automatically to you. You have to do work for it. You have to sacrifice, etc. So if you want to achieve any goal in your life, you have to work for it. Okay, so please work for it. For your success, that is to become a chartered accountant as soon as possible. Let's move and start the income from other source topic. So the income from other source, first we are discussing the concept of deemed dividend. So of course it's not important to win all races of your life, but to finish every race with your best effort is really, really important. So just give your best, and I believe that best is enough. So introduction, it says any income, profit or gains includable in the total income of the assessee, which cannot be included under any of the preceding heads of income. So what it says, if there is an income which is going to be charged to tax, and if cannot be included in any other head of income, then that is going to be your income from other source. Thus, this head is the residuary head of the income and bring within its scope all the taxable income, profits, or gains of an assessee which fall outside the scope of any other head of income. So therefore, when any income, profit, or gain does not fall precisely under any other specific head, but it is chargeable under the head of the act, it is going to be taxed under income from other source. So the same thing has been repeated 3 times in this paragraph to just make it clear what they want to explain to you. Section 56 says income chargeable under this head. Section 56, the income chargeable. So I have explained you earlier in the starting of this class that incomes those does not fall in other heads of income is going to be taxed under income from other source, but there are certain incomes. There are certain incomes which is going to be taxed always under income from other source. So whether it's your business or not, it does not matter. The following incomes what we are discussing is going to be taxed always under income from other source. So you can see this only under the head income from other source. The first one is dividend. So generally dividend, you all know, when company distribute a part of its profit to its shareholder, that would be called dividend. But there is one more concept which is deemed dividend. So that means that is going to be deemed as dividend, which is not real dividend. So a real dividend is what? A real dividend means when company earns some profit and wants to distribute it to its shareholder, that is called dividend in a normal way. So what is deemed dividend? That's something which does not fall in the definition of dividend, but we are going to treat it as dividend. So that would be called deemed dividend. So some other kind of distribution, not the profit, some other thing I am going to distribute. If I am going to distribute to my shareholder, that will be called deemed dividend if the provision has been fulfilled. So the dividend income is always taxed under the head income from other source. The term dividend as used in the act has a wider scope and meaning that under the general rule. So dividend was normal thing, what we all know, but the new thing is deemed dividend under section 222. So there are multiple cases, 222A, B, C, D, F. F is buyback case. The buyback case we have discussed in capital gain, that is section 222F. Okay. So now dividend covered under section 222A to E we are discussing. F is in the other part of income from other source. So first of all, we are going to discuss section 222A, then B, then C, then D and E with example. So according to section 222, the following receipts are deemed to be dividend. And if something is going to be treated as dividend, that is going to be taxed under income from other source. Clear? We have discussed this thing earlier also. So distribution of accumulated profits entailing the release of company's assets. So very simple point. It says if a company distribute its asset to its shareholder, and it is going to be treated as your deemed dividend. Deemed dividend up to the FMV of asset or accumulated profit, whichever is lower. So what is going to be treated as my deemed dividend? The FMV of asset distributed by the company to the shareholder or accumulated profit, whichever is lower. So you might be thinking, what is the meaning of accumulated profit? The accumulated profit means reserve and surplus, which includes any reserve and surplus which has been utilized for the purpose of issue of shares, etc., or which reserve and surplus has been capitalized. You can see the definition is there. Any distribution of accumulated profit. So what is the meaning of accumulated profit? Reserve and surplus plus whether capitalized or not. So if you have utilized your reserve and surplus earlier for the purpose of issue of share or you have been capitalized it, that will also become the part of accumulated profit. Do not worry, we will understand after seeing this example, after solving this example. By a company to its shareholder is dividend if it entails the release of all or any part of the asset. So let's see this balance sheet. In the balance sheet, you can see equity shares capital, including bonus shares of 1 lakh issued out of reserve. So this is 1 lakh has been utilized. This 1 lakh has been capitalized from reserve and surplus. So reserve and surplus was 220 and 1 lakh has been already utilized. So technically my reserve and surplus, or we can say accumulated profit, is not 220. Now it's 3,20,000 in this example. Clear? Now company distribute asset of 2,25,000 to the shareholder and the FMV are as follows. So what we need to compare, there are 4 different cases. FMV or accumulated profit. So in the first case, FMV is 150 and what is my accumulated profit? 320. So whichever is lower would be my deemed dividend. That is in this case 150. What would be in second case? Of course, 2 lakh. What would be in third case? Of course, 3 lakh. And what would be in my fourth case? That would be 320 because lower need to be treated as deemed dividend. That is section 222A. Now 222B says distribution of debentures, deposit certificates to shareholders and bonus share to preference shareholder. So generally we allot bonus share to our equity shareholders. That is okay. But if any company issued bonus share to its preference shareholder, it would be treated as deemed dividend in the hands of those preference shareholders. Okay. So any distribution to its shareholder by a company of debenture stock, deposit certificate in any form, whether with or without interest, and any distribution of bonus share to preference shareholder to the extent to which the company possesses accumulated profit, whether capitalized or not, will be deemed as dividend. The clarification is very important. The market value of such bonus share is deemed as dividend in the hands of only preference shareholder. In the case of debenture stock, etc., their value has to be taken at the market rate. And if there is no market rate, they should be valued according to accepted principle of valuation. The value must have been given in the question. Bonus share given to equity shareholder are not treated as deemed dividend. You can see this example. Now in this example, kindly tell me what is accumulated profit. How much I would take as accumulated profit in this example. Okay, somebody answered. Ishan is saying 350, Julie is saying 350, well done. Pooja is saying 350. Yes, definitely, it's correct. Because 3 lakh is my reserve and surplus, which has already been given, and 50,000 has been capitalized. So I have to include it for the purpose of accumulated profit. Now the company issue bonus share to all the shareholder in the ratio of 1:1. So now you can see equity shareholder also received 1,50,000, but that would not be counted as dividend or deemed dividend as per the provision. 1 lakh preference shareholder also received these bonus shares, so 1 lakh would be regarded as deemed dividend in the hands of preference shareholder. Clear? Now distribution on liquidation. Any distribution made to the shareholder of a company on its liquidation, to the extent to which the distribution is attributable to the accumulated profit of the company immediately before its liquidation, whether capitalized or not, is deemed to be dividend. Same concept. In all these cases, one thing is very simple. If company distribute asset to shareholder, deemed dividend up to accumulated profit. If company distribute debenture, deposit certificate, etc., or bonus share to preference holder, that is going to be deemed dividend. If company distribute on liquidation of a company, that is going to be deemed dividend. And the D point says any distribution to its shareholder by a company on the reduction of its capital. To the extent, same concept, company possesses accumulated profit, whether capitalized or not. Here is the example. Now you can see the example, and first of all, please let me know what is accumulated profit in this example. Mohammed Farhan is saying 2,50,000. Julie Kumari is saying 2,50,000. Okay, student, tell me one thing. If in the previous example, I have asked you how to calculate accumulated profit, and you all have given me the correct answer, 3,50,000. So, am I going to ask the same kind of question again when I know that you can calculate it very easily? So, 2,50,000 is not correct. Yes. Now you revised your answer. The correct answer is 1 lakh. The accumulated profit is 1 lakh. So whenever any faculty is asking you a question, kindly take time and understand that I believe could not be very easy. There must be something in that question. So the accumulated profit in this example is not 2,50,000. Why? The 2 lakh reserve and surplus has been given, 50,000 has been capitalized. But you can see there is a loss also. That is P&L account represent the loss. So this need to be deducted to find out the accumulated profit. So that means my accumulated profit is only 1 lakh. Chalo now, solve this question for me. Case 1 you will solve, case 2 I will tell. Okay, case 1, the company reduced share capital by 150 by setting off the debit balance of P&L account. So what or how much would be the deemed dividend in this case? Here are the provision in front of you. You can read it again. Any distribution to its shareholder by a company on the reduction of its capital to the extent the company possesses accurate profit. Okay. And here's the question. So what should be the correct answer? Ishan is saying 1 lakh and Divya is also saying 1 lakh. Achha. Soumya is saying 1 lakh. Any more? 1 lakh is not the correct answer. Let me tell you, 1 lakh is not the correct answer. So you have to think anything else. Okay, read the provisions once again. Okay, let me show you the screen. Read these provisions once again. Find out what mistake you are doing. You have the provision in front of you. You can easily read. This is the provision in front of you. And after reading this provision, why we are not able to solve this question? Case number 1. 1 lakh is the wrong answer. 50,000. Aditi. Okay. Aditi, I guess first time Aditi has given some answer. I have not read this name earlier. Aditi has said 50,000. Very good. Even somebody is giving wrong answer, it does not matter. You are trying, you are sending your answer. It makes faculty happy because you are interacting, you are involving in the class. So that makes us very happy that somebody is interacting. So 1,50,000 was the wrong answer. 1 lakh also wrong answer, and 50,000. Sorry, Aditi, your first answer, but it is also wrong. The correct answer is, chalo, I'll tell you the answer. Nil. No deemed dividend. Now tell me the reason. Just tell me the reason why it is no deemed dividend. Miss P. Why Miss P is saying, sir, no deemed dividend? So I'm not seeing your full name. Why it's no deemed dividend? Correct. Very good. It's a reduction of capital, and the question was saying there must be some kind of distribution. You have seen that. The provision was saying there must be some kind of distribution. कुछ distribute तो करो shareholder को. हमने क्या किया? Company ने they did not distribute anything. Company ने P&L से set off कर दिया accumulated profit को. So does shareholder receive something? In the first case, you can see shareholder does not receive anything. So that's why understand, na? If there is a question, that does not mean there must be some calculation requirement. There could be answer, no is also answer. जैसे एक answer होता है, yes, this is the amount of deemed dividend. It could be a answer that no, there would not be applicability of deemed dividend. Suppose a person sold his personal car. So what is the capital gain? So we do not need to calculate every time. Suppose I am giving the figures also, okay, 5 lakh was the purchase price, 3 lakh consideration. So do we need to solve it? We need to write it down. There is no capital gain. So no could also be an answer in certain cases. So there is no reduction. There won't be any deemed dividend. Case number 2. The company reduced the share capital by 150 by refunding cash. So is this asset or not? Is there some distribution? Yes, cash has been distributed. So now the answer would be, of course, 1 lakh rupees because I was having accumulated profit up to 1 lakh. I hope it's clear now. Everyone? Good. Sure. What is the meaning of accumulated profit? It has been written. You can go through with this concept. Now 222E is, in my opinion, most important because A, B, and C and D, you can see they are almost having same kind of thing that you have to distribute something. And in that case, there would be FMV or something which is going to be treated as deemed dividend as per according the provisions. 222 is talking about something else. Now what 222E says? It says, if any closely held company, if there is a closely held company, fine, it gives loans or advance to its shareholder, a specific shareholder. So if any closely held company gives loans and advance to a shareholder who possesses 10% or more equity shares, whether directly or indirectly. How indirectly? If this closely held company gives loans in advance to a partnership firm or a company in which this shareholder, which shareholder who was having 10% or more equity share, if this shareholder is a partner or a member in this company and having substantial interest. Substantial interest, remember? What is the limit of substantial interest? How can we identify that someone is having substantial interest in any organization? I get the definition under section 232 in I think. Okay, maybe. So what is the percentage defined to find out whether someone has substantial interest in that organization? Very well done, students. Mr. Balti Anil is saying 20%. Well done. Pooja is saying 20. Well done. Soumya 20% or more. Correct. 20% or more. 20%. Abhinash is also saying. Tanu is also saying. Well done, everyone. High five to Wi-Fi. High five from Wi-Fi. Okay. So if you are having more than equal to 20% voting power or profit sharing ratio in any organization, so that would be also called substantial interest. So if closely held company does not give this loan advance to shareholder, suppose name is Mr. A, but this closely held company gives this loan advance to a partnership firm, suppose XYZ, or a company in which this Mr. A is already a partner or a member and having substantial interest. So that would be also treated as deemed dividend. So in this case, it would be deemed dividend in whose hand? Of course, Mr. A hands, not in the hands of firm or a company. Because it will assume that we are indirectly giving this dividend to Mr. A. Or any other case. If there is any other case in which the directly or indirectly this loan and advances has been utilized for the benefit of Mr. A. Suppose closely held company gives this money to Mr. C. C does not have any connection with Mr. A, but C, after receiving loan from this company, transfer this loan and advances to Mr. A. So it would be assumed that indirectly this loan has been transferred to Mr. A. So that would be called deemed dividend under section 222. Let's see the provision in detail. Any payment by a company not being a company in which public are substantially interested. Section 218 companies are those companies, I guess, in which public are substantially interested. So we are talking about that company in which public are not substantially interested. We called it closely held company. Generally, private companies. Okay. So if they provide any sum, whether as an advance or loan to a shareholder, suppose Mr. A, being the beneficial owner of share, beneficial mean real owner of those shares, holding not less than 10% of voting power. So he must have more than equal to 10% voting power. That means equity shares. Or we are giving to any other concern, any other organization, any partnership firm, company, etc., in which such shareholder, that means we are talking about a such shareholder who is having more than equal to 10% voting power of that closely held company, is a member or partner and having substantial interest. So if that closely held company transfer loan or advances to any organization in which that shareholder who is having 10% or more shares of that closely held company, also substantial interest in that firm or a company. So we will assume that it is a deemed dividend in the hands of Mr. A or any other person indirectly on behalf or for the individual benefit of any such shareholder. So if suppose that closely held company transfer that loan or advances to Mr. C, D, E, F, G, but subsequently he transferred that amount to Mr. A. So we will assume that indirectly it has been flow from closely held company to Mr. A. So that would also be treated as deemed dividend to the extent to which the company possesses accumulated profit. This is same condition in all cases. Clear? So these are the provision. Any payment by a company in which the public not substantially interested of any sum by way of advance to any shareholder which is the beneficial owner, etc. Advance or loan by a company in which public are not substantially interested to any concern, HUF, AOP, BOI, in which shareholder having the beneficial owner, that means more than 10%, and having the substantial interest. So these will be treated as deemed dividend in the hands of that shareholder. Okay. There are some exceptions. In some cases, this provision would not apply. The following payments or loan given would not be deemed as dividend. Loan granted in the ordinary course of business. Now, suppose that closely held company is a financing company whose ordinary course of business is to provide loan, etc. So if during an ordinary course of business, that means if that company provide loans to that shareholder who is having 10% of voting power in ordinary course of business, what does mean of ordinary course of business? That we are charging interest at market rate from him, we are following all the provision as we generally follow to provide loan, etc. So in that case, it would not be treated as deemed dividend. If the loan is granted in the ordinary course of its business and lending of money is a substantial part of the company's business, the loan or advance to a shareholder or the specified concern is not deemed to be dividend. So what we are reading exception. Payment on buyback of share. You must have remembered up to 30th September 2024. If the shareholder receive anything on buyback, company needs to pay tax with that 23.296% rate. In the hands of shareholder, that has been exempted, I guess section 1034A it was, I think, okay. So in that case, if in case of buyback of share, shareholder receive any payment, then it would not be treated as your deemed dividend. It would be treated as your deemed dividend if it has been received on or after 1st October 2024. So we have already gone through with this provision. Now third is dividend paid is set off against the deemed dividend. Where a loan had been treated as dividend and subsequently the company declare and distribute dividend to all its shareholders, normal dividend declared. First of all, something has been treated as your deemed dividend, and after that company declares some normal dividend, including the borrowing shareholder, and that person in the hands of which that loan has become the deemed dividend also received the dividend. And he said that I do not want to receive that normal dividend, kindly set off this normal dividend from my loan amount, which has been already treated as deemed dividend. And the dividend so paid is set off by the company against the previous borrowing. That adjusted amount will not be again treated as dividend. So if anything which has been already become your deemed dividend under section 222E, due to that loan you have taken, and if any dividend you received now, normal dividend, and you say to the company that I do not want this 20,000 amount of supposed dividend, kindly set off this 20,000 of normal dividend out of my 1 lakh rupees of loan, which has already been treated as deemed dividend. Then this extra 20,000 what you have received as dividend will not be regarded as your dividend. So suppose your deemed dividend already is 1 lakh. Why? Because you have taken loan from a company. Now you receive 20,000 dividend and you ask company, do not pay me this dividend, and company set off this dividend from your loan liability. So now your this dividend would not be treated as dividend. Clear? Note, if something has been treated as your dividend, deemed dividend, under section 222E, then even after you repay that loan, you have taken some loan of 1 lakh rupees today, so that has been treated as deemed dividend. After 1 week, you repay the whole amount to the company with interest. Still, it will not change that deemed dividend. The 1 lakh would be your deemed dividend in this year, and repayment of loan would not change the deemed dividend concept, which has already been treated as your deemed dividend. Charge of interest at market rate does not make any difference in the applicability of section 222E. Suppose company provide you loan of 1 lakh rupees. And suppose this has been done on 6th October 2024. After 1 week, you repay whole loan with interest, 1 lakh plus interest on suppose 15th October 24. Still this 1 lakh would be treated as your deemed dividend for this year. So the repayment of loan would not change the applicability of section 222E. Now we are having some example of it. HUF through its Karta, Mr. Kishore, is a shareholder in a private company and holds 13% share. So this is your homework. Kindly try these questions. This is homework. This is having your answer. So you can go through it. If there is any problem, I will solve it for you. Example number 2 is also your homework. Okay, in the next session, as we always do, I request all of you that please come forward for the summary, what we will discuss in today's session. So kindly summarize those provisions in our next class. That would be on 3rd of June. And please solve these questions also, what I am giving you as your homework. Okay. Example number 3 also. So these were deemed dividend provisions. So what I did, because the deemed dividend concept in your study material does not have examples. So I have prepared this part 1 of your income from other source separately with example, because I believe that if we are going through only the theoretical part of deemed dividend, you won't be able to understand properly. So I have prepared these example for you. Now we are switching on to the study notes, and from that we are going to continue our topic of income from other source. So we will not discuss income from other source, deemed dividend part from your study material. Okay, because that we have already covered over there. Introduction we have already discussed in that part. The method of accounting, this is new. So we are having 5 heads of income. Income under the head salary, income under the head income from house property, income under the head PGBP, income under the head capital gain, and income from other source. In 3 heads of income, out of these 5 heads of income, in 3 heads of income, the income need to be taxed on accrual or receipt, whichever is earlier basis. In case of out of these 5 heads, in 3 cases, you have to tax your income either on accrual basis or receipt basis, or either we can say you can choose the method of accounting on the basis of mercantile system of accounting or cash system, whichever is earlier. For 2 heads of income, you are having option. Method of accounting is having option. Either you can tax as per accrual system of accounting, that means mercantile system of accounting, or as per cash system of accounting. 1 head of income is income from other source. Can you tell me which is the other one? Except that all needs to be taxed on the basis of Soumya is saying PGBP. Ishan was saying, sir, what if after repayment of loan, company distribute dividend to? If after repayment of loan, company distribute dividend, that is going to be treated as dividend, normal dividend. But if your loan is continue and company distribute dividend and you ask it to set off, then that dividend will not be taxed in your hand. Okay. Soumya is saying PGBP, Pooja is also saying PGBP, and Tanu is also saying the PGBP. The correct answer is, of course, PGBP. So in case of PGBP and income from other source, we are having option of accounting to choose whether we want to choose method of accounting as per mercantile system or cash system. And on that basis, we have to tax our income. In all except these two heads of income, we have to tax our income on the basis of receipt or accrual, whichever is earlier. You must have seen in the head of salary case, whether salary received, if advance received, that is going to be taxed. Even if not received, it has to be taxed on accrual basis. Same in case of house property and capital gain. Method of accounting, section 145 says, income charged bill under the head income from other source has to be computed in accordance with cash or mercantile system of accounting regularly employed by the assessor. Now we are having provision regarding dividend and deemed dividend, which we have already gone through with the last topic you have seen, except section 222F. So A, B, and C, D, you can see there is no example in study material. So that's why I prepared that separate notes for you. Because it was difficult to insert example in this format. It's very difficult. So we have already gone through with 222E provision. We have covered over there. Now from 222F, in case of buyback of shares, whether listed, etc., that is also has been discussed in capital gain topic. That is section 222F provision, what we have already discussed. Up to 30th September, that would not be taxed, but from on or after 1st October 2024, in case of buyback, that amount is going to be taxed under income from other source under section 222F. The example what we have discussed in last session of buyback is over here. The same example I have asked you, there were 3 examples. You must remember example number 11, 12, and 13, which I have given you for homework, was part of this also. So you can go through this example. We have already solved this example as question number 11 of last class. Okay. So exceptions also we have covered in our last topic of deemed dividend. So this deemed dividend concept we have already gone through. Now we are discussing other incomes. The second income is casual income. So first was dividend, and dividend was 2 types, normal dividend and deemed dividend. Now what is casual income? Casual income means that income which has been arised casually. So the impact of luck is more than that your effort. So income which is arise casually would be treated as casual income. So we are having example regarding it. Casual income means income in the nature of winning from lotteries, crossword puzzles, races, including horse race, card games, and other games of any sort, gambling, betting, etc. Because in these kind of things, luck is important. Your effort has having a limited opportunity to make you win, but the luck or the destiny is having a higher role. Okay, tell me, if somebody is going to KBC, कौन बनेगा करोड़पति, and won 1 crore rupees. So whether it would be a casual income or not. Suppose you, all you student, you went to a कौन बनेगा करोड़पति show and won 1 crore rupees from it. So is it a casual income or no? If you are saying no, then you have to answer what head of income is going to be included this income. Nidhi is saying yes, casual income. Anandati is also saying yes, casual income. Anybody think it's not a casual income because it's based upon our knowledge? Nobody is thinking that it is based upon our knowledge. How it is based upon the destiny? Why it's casual income? Without knowledge, can we win that? Okay, so if you all are saying it's casual income, so the answer is correct. Of course, it's casual income. Nobody is thinking that it is related to your knowledge. So why it is casual income? Why it is not other income other than casual? Julie is saying, Ishan is saying, yes, sir, please tell why. Very good. Because it's not about knowledge. It's about that question has been asked to you, the answer you remembered at that time period. If it is based upon knowledge, then always a scholar who plays that game should win more than a normal person. But you might have seen there are very educated person who participate in KBC might be winning 3 lakh, 320, 6 lakh, 10,000, 20,000. And there are also those person who those are not that educated. They are having normal knowledge. Maybe they are connected to a village, etc., not having proper education. They are winning 50 lakhs, 75 lakh, even 1 crore. Why? Because the question asked at that time, you remember the answer. Because if the knowledge is important, so it means always that person should win more, those having knowledge more than the other person. Let me give you an example. There was a movie regarding it. You must have known that won the Oscar award for music also, Slumdog Millionaire. If you have watched that movie, you might have correlated that the question asked in that show, that KBC show, which has been uh, shown in that movie, the question asked by the host, Anil Kapoor, was connected to that the person was participating with his life, his previous life. Those all question was connected to his previous life. So that's why he was able to answer that. So the question, in the same way you can understand, if any game show etc is there, so there are possibilities that might not be remember a question which is actually you should have at the time of that game. So KBC is not knowledge. It is that the question they are asking at the time of that show, you remember the answer of that question. That is all about it. So that is your destiny. That is your luck, not the knowledge. So that's why it is a casual income. Okay. Point number 3. Interest received on compensation or enhanced compensation deemed to be income in the year of receipt and taxable under the head income from other source. So we have gone through with this provision under capital gain, compulsory acquisition. In case of compulsory acquisition, if there is OCEC and due to that OCEC, if you receive interest, that interest is going to be taxed under income from other source. We have discussed this provision and there was a concept which says 50% of that is going to be taxed under income from other source. Balance 50% is exempted. Okay. The 50% concept will come later when we will discuss allowed expenditure and not. In that, it will explain that in case of interest on enhanced or original compensation, only 50% is going to be taxed and 50% will be deemed allowed as expenditure. Point number 4. So this is capital gain. We have already covered section 45(5). After that, advance money forfeited due to failure of negotiation, capital gain. Under section 51, we discussed that if the advance money has been forfeited on or before 31st March 2014, so the cost need to be reduced. But if it has been forfeited on or after 1st April 2014, in that case, it would be your income from other source in the year in which amount has been forfeited. So that means from previous year 14-15 or assessment year 15-16, that would be part of your income from other source. Now this is very, very important provision, the gift provision what I was talking. In my opinion, the gifts provisions are utmost important topic from income from other source chapter. Let me tell you again, I'm not saying that others are not important. If I'm saying this is very important, and if you are hearing that sir is saying only this is important, so please let me tell you again. No, it is very important in my opinion, but every point, every concept is important. Even in the examination, that interest on compulsory acquisition, etc., provision has been asked. So anything could be asked, but this is a separate, huge provision. Like the deemed dividend was having A, B, C, D, E, F, large provision, lengthy provision. In the same way, this is a provision which is very important as well as it is having multiple cases. And you can see why I'm calling it gift, because gift means something you received without consideration or inadequate consideration. That is gift. So for that concept, we have to prepare a chart, because if you go through with these provision like this, so you might be confused. So let me explain you these provision with the help of a chart. Okay. So gift provisions. So there are two kinds of gift. We are understanding the provision from the point of view of a receiver. So if I am receiving gifts, so gift would be of two kind, whether it would be monetary gifts or they could be non-monetary gifts. In case of non-monetary gifts, only 9 asset has been included, like building, land, jewelry, bullion. Out of these 9, I guess 6 are those assets, those we have discussed in capital gain. When we discussed the definition of capital gain, the first concept was capital asset. In the concept of capital asset, the first point was those capital asset which will not be treated as capital asset, that any stock in trade of business. And the second point you might remember was any personal movable asset will not be treated as capital asset. But there were exception of those personal movable asset. Like there are some asset, those are personal and movable. Still they will be treated as your capital asset. Remember jewelry, then we are having drawings, paintings. So out of these 9, 6 was I guess there. Sculptures, any work of art. One immovable property has been included in these 9 properties, like land and building. So it's 7. One is bullion has been included over here. And I guess the shares and securities. So we are having list of all these, but I'm just telling you these 9 assets. 6 are those from capital gain exception of movable and personal, and 3 these. So total 9 assets are going to be treated as taxable income in my hand. So if I'm receiving any of these 9 assets without consideration or in adequate consideration, so that could be treated as income from other source in my hand for the purpose of taxability. Or these are monetary. Monetary means check, cash, draft, IMPS, RTGS, UPI, any kind of payment. So for monetary kind of payment, the concept is very simple. It says if any monetary amount whether received from one or more person in aggregate exceeding 50,000 in previous year. then whole amount will be treated as income from other source. The provision is very simple, very clear, that if any person, suppose if I am receiving monetary gift, check, cash, draft, whatever it is, from more than or single one person in a year, and which is an aggregate exceeding 50,000, then this whole amount will be treated as income from other source. For example, Mr. A received 20,000 from his friend, then 20,000 from another friend, then 20,000 from another friend in different dates of a year. So in aggregate in this previous year, he received 60,000 and 60,000 is exceeding 50,000. So how much would be my income from other source in this example? Full 60,000 would be my income from other source. As simple as that. Suppose Mr. A received 10,000 from his 5 friends each. 5 friends, 10,000 from each friend. 5 each friends, okay? So in aggregate, he received 50,000. There would not be any income from other source. Even if 1 rupees has been increased, the full 50,000 1 rupees will be treated as his income from other source. I hope it's clear, simple, fair and square. Sure. Meaning of inadequate consideration, Nidhi is asking. We will discuss it, Nidhi, but let me tell you, we will receive gifts with 2 ways. Any non-monetary gift we are going to receive, if as a gift, will be of 2 ways, whether without consideration or whether inadequate consideration. Suppose one of my friend is wants to give me jewelry of rupees 10 lakh. 10 lakh jewelry, someone wants to gift me 10 lakh. So either in reference to that gift, they will not charge anything. So that will be called without consideration. If that person say, I will give you 10 lakh rupees jewelry, but you have to give me 2 lakh rupees only for it. So for 10 lakh rupees, I am giving only 2 lakh. So that is called inadequate consideration. Less consideration, under consideration. So if somebody is giving me 10 lakh rupees and I am giving 2 lakh rupees, somebody is giving jewelry of 10 lakh and I am paying only 2 lakh rupees, then what is the gift amount technically? Is it 10 or 8? Of course, it's 8 lakh rupees. So 8 lakh, which is free, that is gift. So if against 10 lakh of jewelry, somebody asked me to pay 2 lakh rupees. So how much is free for me? Free is 8 lakh. So that would be called 8 lakh. So that is called inadequate consideration. Okay, sure. Moving on to non-monetary consideration. As I have explained you that we are having 9S. So let me tell you in the starting, before I ask you any question, if there is a question regarding non-monetary asset to be treated as gift or not, then first of all check whether the asset given in the question does fall in these 9 asset or not. If they does not fall in these 9 asset, do not try to apply the provisions of income from other source. So what happened whenever we see that there is a gift, we think, okay, let's apply the provision of income from other source, whether it's without consideration or non inadequate consideration. But first of all, you have to check whether that asset particularly fall in these 9 asset or not. If that does not fall, like let me tell you, in these 9 asset, car does not include it. So if somebody is giving his car as a gift to someone, whether without consideration or inadequate, do not apply any provisions of income from other source in the hands of receiver. Understood? Very good. So these 9 asset has been also separable, immovable, property provision has been separated from other 8 asset. So all other assets provisions are same, but immovable property, that means land or building or both, they are separate. So immovable properties provisions are different in comparison to these 8 assets. So first of all, we will understand what is the chargeability or treatment of land, building, or both if received without consideration or in adequate consideration. How we are going to tax them. So let me show you. If we are receiving immovable property, there would be 2 circumstances. Whether I am receiving it without consideration or I am going to receive it in adequate consideration. Let me tell you one more thing. Each property taxability find out separately. Like I have received 3 land free of cost in the previous year. Then for applying the provision of income from other source, whether without consideration or inadequate consideration, you have to find out income from other source separately for each property. You cannot combine it. In these assets, this is aggregated need to be searched out. In aggregate, we have to search the income from other source. But in case of immovable property, we have to apply the provision to find out whether it is taxable or not, separately in case of each asset. Clear? So if it is without consideration, very simple provision. The provision says if a stamp duty value exceed 50,000 rupees only. If the property what I received, if the stamp duty value of that property without consideration, that means I did not pay anything. If it is exceeding 50,000 rupees, the whole stamp duty value will be income from other source. As simple as that. And second point, if stamp duty value less than equal to 50,000, no income from other source. देखो दोबारा से लिख रहा हूं बच्चों, ध्यान रखना, सेपरेटली चेक करनी, ओके, separately for each property. That means if I receive 3 immovable property in a year, free of cost, 40,000 stamp duty value each. So total I received 1,20,000 rupees property free of cost. But that would not be included under income from other source because separately no property value exceed 50,000. Now suppose one property stamp duty value exceeding 50,000. One stamp duty value is 60,000. And other 2 properties value is 40,000 each. Now total I have received 60 plus 40 plus 40, 140. How much will my income from other source? Only 60,000 will be treated as my income from other source because in case of immovable property, you have to find it separately. It's as simple as that. Stamp duty value will be given in the question. Now the second case is interesting. Inadequate consideration. In this case also we have to find it separately. Okay, in all those cases we have to find it separately, but the concept is different. It says if the difference of stamp duty value and consideration. Now there must be consideration because it is inadequate consideration. So if there is some consideration, what we are paying, and the difference of stamp duty value and consideration exceeding higher of following, then that will be income from other source. What is the higher of following? The provision says 50,000, this is fixed value, or 10% of consideration. So we have to find out the higher of these two values. So the difference, the main thing is, let me tell you, the main thing is difference. Remember, we have to compare this higher value with the difference. So the difference between the stamp duty value and consideration, if the difference of stamp duty value and consideration exceeding higher of these two, so the value come over here is higher. And now if the difference is exceeding this higher value, if then difference will be income from other source. You might be getting confused. Do not worry. Let me show you an example. You understand what I'm trying to say. So in case of immovable property, if that is inadequate consideration, suppose the stamp duty value is 1,40,000 and the consideration is 1 lakh. So in this case, you can see the difference of stamp duty value and consideration. How much it is? 40,000. Clear? And now I have to find out these 2 points. First is 50,000 and second is 10% of consideration. That would be 10,000. Which is higher? The higher is 50,000. So now the difference does not exceed the higher value. Difference does not exceed this higher value. So there would not be any income from other source. Difference should exceed the higher of these two values. In that case, there would be income from other source. Let me tell you second example. Now take this stamp duty value is 1,60,000 and consideration is 1 lakh. Now difference is 60,000. Now apply these 2 points, 50,000 and 10,000. Higher is 50,000. And now you can see this difference is exceeding this higher value. So if difference is exceeding, then the difference is your income from other source. Do not try to find out the difference between 60 and 50, 10,000. No, if the difference is exceeding the higher of these two values, then that difference is going to be treated as income from other source. If difference is lower, no income from other source. If difference is more than that, higher value, exceeding the higher value, what we have find out from this, if difference is exceeding, then in that case, that would be your income from other sources. Clear? So, Miss Richa Kumari is asking a very interesting question. How they know like my friend give gift to me if they have transferred you amount via bank or UPI, etc. So government will come to know because that will be in your statement. If your friend give you gift in monetary terms, then of course they will not able to find out. That's not easy. So if when we learn the law, when we study any law, when we teach, we imagine if it happens, then what is the provision we have? Practically, it would be possible, Richa, that government would not be able to find out whether your friend give you gift more than 50,000 or not. But law is not going to be read like this. We are reading Income Tax Act. So we are, as a student, we are studying that what is the treatment if the provision is there, if the situation arises, if you receive more than 50,000, government comes to know, then what is the implication? If the examiner will ask you that Mr. A gives gift of rupees 1 lakh in cash to Mr. B, his friend, what is the tax treatment? So you cannot answer how government will come to know. We will not tell. So there will not be any tax. So when we study act, when we read any act, we have to solve it by imagining this, that everything has been clear. If it has been explained, then what is the treatment? In practical life, let me tell you, it is very different to find out, or very difficult to find out these kind of transaction. Government try to catch these kind of transaction, but it's not easy. But we are not studying on the basis of practical things. We are studying what is going to be asked in the examination and what you need to give your answer as per the act. Okay. So we have discussed the gift provision of monetary gifts, and in case of non-monetary, we have gone through with the provisions of immovable property. Now the remaining provision we will take up after a short break. Okay. So Mr. Manish, can we have a short break of 10 minutes? Mr. Manish, can we have a short break? Okay. Welcome back, everyone. I believe you must have your tea, coffee, etc. So we were discussing the provisions of income from other source, gift provision. Do you have any query till now, Sprints? If you have any query, you can ask. Okay. So I guess we should continue now. So we have discussed the concept of gifts in case of monetary as well as non-monetary case. Now moving on to in case of non-monetary from immovable property to other cases. In case of other 8 assets, again the same concept would be there. Either it would be without consideration or that is going to be inadequate consideration. The important thing to be remember, it should be checked now in aggregate, not as per immovable property when we have to see these without consideration or inadequate consideration case separately. But now in this case, we have to aggregate the value of all these 8 different kind of asset. And if the aggregate exceeding 50,000, that is going to be taxable or not. So first case is FMV of, if that is without consideration, FMV of all 8 asset if exceeding 50,000, whole amount income from other source. Clear? Suppose I have received one asset, the market value is 30,000. One more asset I have received in the previous year, suppose the value is 15,000. No other asset has been received. The FMV is 30 and 15. So now it's 45,000. So nothing is going to be taxed as income from other source because it does not exceed 50,000. But suppose one more asset has been also received worth 10,000 fair market value. Now aggregate is 55,000 and because it exceeds 50,000, so this will be my income from other source. Simple. In case of inadequate consideration, we have to find out the difference. So if difference between FMV and consideration of 8 asset in aggregate exceed 50,000, then that difference is income from other source. I hope it's clear. So that was the case. The gift provision we have gone through. So I just prepared this chart in front of you. I did not upload this chart. I could make the chart of this asset and we can discuss with the help of chart directly. But I did not make the chart of this provision because I believe that if I'm trying to explain you this chart by after making a PDF, that won't get that much clarity when if I'll write it in front of you and explain you each and everything. So that will give you more clarity regarding the provisions. Okay. Moving on further. So you can go through with the provision what we have discussed from diagram from point number 5. You can go till over here. Clear? Now you can see the provision of section is a very important note. We are still continuing in gift provision and it says the thing you have received, it should be is in the nature of capital asset. If the recipient treated as a stock in trade, then this concept would not be applicable. The provision of section 56 to 10 would apply only to property which is in the nature of capital asset of the recipient. From the point of view of recipient, we have to see, and not stock in trade, raw material or consumable stores of any business of the recipient. So the person who is giving, that does not matter. The person receiving it, if he treat it as a capital asset, then income from other source provision would be applicable. Therefore, only transfer of a capital asset without consideration or for inadequate consideration would attract the provision of section 56 to 10. We have an example of this also in detail. We will discuss it, but that's a very important note. The table has been summarized the provision, what we have seen from the chart, without consideration, etc. Again, in respect of gift provision, there are exceptions, or you can say exemptions, or you can say non-applicability. There are certain gifts, those are 100% exempt from the taxability. Whether they are monetary, non-monetary, etc., does not matter. If these condition has been fulfilled, then in that situation, these gifts are exempted, not applicability. However, any sum of money or value of property. So you can see it is applicable for monetary as well as non-monetary. In the following circumstances would be outside the ambit of section 56 to 10. If the gift has been received from any relative. So whether it's monetary, whether it's non-monetary, if the gift has been received from relative, that is outside the purview of income from other source taxability. How much amount, whatever amount does not matter. 5 lakh, 50 lakh, whatever it is. Or on the occasion of the marriage of the individual. On the occasion of the marriage of the individual, if gift received from relative or non-relative, both are exempted. So from relative, gift received anytime, whether there is marriage, no marriage, birthday, Sunday, Monday, Tuesday, etc., does not matter. So from relative, if gift received, always exempted. But at the time of marriage, gift received from relative, because it relative already covered in point number A. So this is more importantly for non-relative. So if there is any non-relative like your friend, etc., if they gift any money or property at the time of your marriage, so that amount is exempted, non-taxable. The third is again simple, by way of a will or by way of a inheritance, in contemplation of death of the payer or donor, as the case may be, from any local authority, from any fund or foundation or university or other educational institution or hospital or any other medical institution or any trust or institution, exempted, from or by any trust or institution registered as specified, of course, by any fund or trust or institution or any university, other educational institution, hospital, referred, registered, specified, by way of transaction not regarded as transfer under section 47(1)(4)(5)(6)(6)(b), 6b, d and 7, as we have covered in capital gain concept. From an individual by a trust created or established solely for the benefit of relative of the individual. So if you receive gift from these person and other classes of person subject to such condition may be prescribed. So from relative at a time of marriage, at time of will, contemplation of death, from some specified trust, etc. If you receive, those gifts are exempted. And this is important. This is a new one. This is important. We are just continuing the exemption gifts. So till K point, we have discussed from which person, if we receive, what is going to be exempted. Now L point is for a specific case. That is for COVID-19. We all know about it, of course, COVID-19, 2020 and 21. So if any monetary amount received for medical treatment of any patient or for his family member from some specific person, then that amount is going to be exempted. So if amount received by an individual from any person in respect of expenditure actually incurred by him on his medical treatment or treatment of members of his family. So you can see this is the first important point, received by an individual from any person for medical treatment of himself or medical treatment of family. Why? For the illness related to COVID-19, subject to specified condition. Accordingly, the central government had notification number so and so. Government say you have to submit some records, some documents to us. What are those documents? You can go through with point number A and B. The details of the amount so received, the amount you received for the medical treatment in any financial year has to be furnished in the prescribed form. You have to inform to the income tax department within 9 months from the end of such financial year. In the financial year in which you have received this amount for the medical treatment. So after the end of the financial year, within 9 months, you have to inform to the income tax department how much amount you have received. So that amount is going to be exempted. This is for medical treatment of COVID-19. Now this is if due to COVID-19, any death is there. And on death, if amount received, that is also going to be exempt. So death should be due to COVID-19. So if any amount received by member of the family of a deceased person, member of the family. So this benefit is not for individual, this is for the family member of that deceased person from the employer. So suppose Mr. A was working somewhere and he passed away during COVID and his employer paid any compensation. So that compensation is exempted without any monetary limit if the death is due to COVID-19 and received by the family member. Or if the compensation received by any person other than employer, then up to 10 lakh rupees is exempted. If it is more than 10 lakh, the excess is going to be taxable. You have to prove it that the cause of death person is, of course, illness related to COVID, and payment should be received within 12 months from the date of death of such person. So if the payment has been received within 12 months from the death of that person, that any amount received by the family members from employer, unlimited amount exempted, other person 10 lakh rupees exemption, subject to the condition notifying. So they are following condition. The following condition you need to go through. Just go through with this condition to understand the provision more deeply. Now, meaning of certain terms. What is the meaning of capital asset? So in the gift case, I have told you monetary and 9 non-monetary asset has been included. So these are the list of those 9 properties. Or we can say non-monetary asset. So if you solve a question of gift in case of asset, you have to firstly check whether the asset which has been transferred under a gift does fall in this category or not. And you can say the first one is immovable property. Shares is new. Jewelry was in that capital gain definition. Archaeological collection was there. Drawing was there. Painting was there. Sculptures was there. Any work of art is there. Bullion is new. It also includes virtual digital asset. In case of individual, the gift from relative is exempted. So what is the definition of relative from the point of view of individual? So if you are receiving gift from any of these cases, any of these relatives, that is going to be exempted. So these are technically exempted relations. Any amount of gift you can receive from these person at any point of time, there would not be any taxability. If you want to know the relative from the definition of from the point of view of HUF, so it says any member of HUF would be considered as relative if the gift has been received by the HUF. What is the meaning of family? The family meaning has been explained it over for the purpose of COVID-19 case. L and M case. What is the meaning of family? It has been explained over here. You can go through with this, students. This is a chart regarding TDS and tax implication. So we will going to discuss this under TDS chapter. Not over here. This is regarding the TDS concept. So we have to discuss this topic in TDS topic. Illustration we will take in the second session. First of all, we have to cover the provisions. Then we'll move on to the illustration part. Somebody has raised his or her hand. Somebody was raised hand. Who was it? Section 43CA, Mr. Mohit is asking a question. Nidhi is asking, sir, bullion और shares in security को क्रॉस क्यों किया है? क्रॉस नहीं किया है, प्लस किया है, प्लस 6 एसेट वो है जो कैपिटल एसेट की डेफिनेशन में पढ़ाई गई थी, ठीक है? तो वो 6 हैं, 2 और प्लस हो गई हैं, बुलियन और शेयर एंड सिक्योरिटी, तो वो ऐसे 8 हैं, वो क्रॉस नहीं है निधि, वो ऐड की गई है। वर्चुअल डिजिटल एसेट्स क्या होती हैं? वी विल एक्सप्लेन इट लेटर सौम्य. फर्स्ट ऑफ ऑल देयर इज सम क्वेरी फ्रॉम मिस्टर मोहित. He is saying, sir, I have doubt in section 43CA. So that is the part of PGBP, Mr. Mohit. That is not the part of section capital gain or income from other source. So let me take picture of your query, Mr. Mohit. We can discuss it on a problem session case because that is not the part of our income from other source or capital gain. Okay. The question is regarding capital gain, I feel, but you have written section 43CA. Sir, I have a doubt in section 43CA. Suppose builder has sold his flat to Mr. X at 1 crore and Mr. X given the token of rupees 10 lakh to builder and balance amount to be given after once the finance is arranged. Then after 2 months, Mr. X cancelled the contract and told to forfeit the token amount. Later, builder, after forfeiting his amount, sold to another person, Mr. Y at 1.2 crore. Then which value will be taken? Agreement value or stamp value, or which date will be considered? Your question, this is regarding your stock in trade. This is not capital asset question you are asking, but when you say that the second time when the builder has transferred the asset, so we have to see at the time of transfer of asset, if the advance has been taken via account pay check or RTGS, etc. Then at the time of agreement of stamp duty value need to be taken. We have discussed this thing in section 50C. We discussed in capital gain, and I have discussed this topic in detail. And if at the time of agreement, the second time when he sold that property, he took the advance. So if at the time of that agreement, the amount has not been paid by electronic mode, etc., as specified in section 43C or 50C. In that case, stamp duty value at the time of registry, the actual transfer, need to be taken. It's a very simple thing. There's nothing to be get confused. Okay, Mr. Mohit? Okay. Okay. Let's discuss. So these questions we will discuss in the next session. Let me complete the provisions part today, because these provisions are including multiple provisions. So first of all, we have to complete all the income from other source provisions, so we can take these questions, test your knowledge question, and other MCQs also. Okay. So that is point number 6, that is compensation or any other payment received in connection with termination of his employment. So any compensation or any payment due to or received by any person by whatever name called in connection with the termination of his employment or modification of the terms and condition relating thereto shall be chargeable to tax under this head if it does not taxed under any other head of income. Suppose somebody is getting gratuity, etc. So that is not going to be taxed here. For this, there is salary concept is there. So if there is any kind of compensation on which PGBP, on which salary provision does not apply, if that has been received, that is going to be taxed under income from other source. That was the point number 7 I was talking about, that this has been inserted new. Last year it has been inserted. That is sum received including the amount allocated by way of bonus or any other LIP, if that is not exempt under section 1010D. So this is a huge topic. And I believe if we start discussing this topic, then you will be very confused with the other provisions of income from other source. Now, till now, today we have discussed deemed dividend concept, then some small concept, gift concept we have discussed, then the compensation provision, what we have just gone through. So I'm skipping point number 7. The point number 7 is almost having 12 or 13 pages concept. So that concept we will discuss then in the next session, in which we will just start taking up with point number 7. All other provision, we are completing it today. So that would be easy for us to separately understand point number 7, because point number 7 has no correlation with any other provision of income from other source. So you can see I have written later. So later, that means we will discuss it in the second session. And you can see it's huge. Multiple concepts are here in point number 7. Still, point number 7 is continuous units. Okay, so till over here, point number 7 provisions was there. So we will discuss all these provision one by one in the next session. First of all, we are completing the normal income from other source provision, because 1 year earlier, there was no point number 7 was there. So income from other source was very easy. You can see till now, whatever we have discussed in income from other source, like deemed dividend concept, it is easy. Casual income provision we have gone through. Gift is little complex, but if you go through with the provision once, you will find it out that it is very easy. Then that is COVID concept, then the basic provisions, compensation, etc. This was the income from other source kind of provision. This taxability of life insurance policy provision makes it slightly complex. So we will discuss all the provisions of life insurance policy in the next session, because we just want to continue the kind of provision we are discussing in income from other source. There are some income under the head income from other source. These are going to be taxable only if not chargeable to tax under the head PGBP. So the following incomes what we are discussing is going to be taxed generally under PGBP. But if it is not going to be taxed under PGBP, only in that circumstances, these are going to be taxed under income from other source. Any sum received by an employer assessee from his employee as contribution to any provident fund, superannuation fund, or any other fund for the welfare of the employees. Income from letting out or hire machinery, plant, or furniture. Letting out of building is generally income from house property. But if it is inseparable from the letting out of machinery, plant, or furniture, the income from such letting. Interest on securities. So interest would be the part of PGBP if it is an investment company, etc. But if it is not taxed in PGBP, then that is going to be treated under income from other sources. Certain interest income arising to certain person would be exempted under section 1015 by example. Now this is important for the purpose of your examination. Income by way of interest, premium on redemption, or other payment on notified security bonds, annuity certificates, or other savings certificate is exempt, subject to such condition and limit as may be specified in the notification. It may be noted this post office saving bank account interest provision has been asked in the examination. So that's why I'm saying this is very important. It may be noted that interest on post office saving bank account, which was so far fully exempt, would henceforth be exempt from tax any assessment year only to the extent of 3,500 rupees interest exempted in case of individual. And if it is a joint account, then exemption would be double, 7,000 rupees exemption would be there. Then interest exempt on interest on gold deposit bonds, interest exempted on interest on bonds issued by local authority or state pooled finance entity. Now, Keyman insurance policy provision is also there. So when business takes Keyman insurance policy for any of its employee, what is the meaning of Keyman insurance policy? So if you are running a business in which there are some employees, those are utmost important for the purpose of business. Those are called keymen of that business. Keymen means very important or most important employees of an organization, employees, officer, etc. So if there is some mishappening happened with these employees, so business would be in danger. So to intact our business, to protect our business from that danger, company can take insurance policy on the life of those key man persons of the organization. So if a business take insurance policy on the life of certain key men of the organization, that is called key man insurance policy. And business can claim the premium of this policy as in expenses. Now we are discussing what is the treatment at the time of repayment. So the repayment of that insurance policy, the payment would be either received by the employer. Majority part is generally received by the employer because he is the one who is paying the premium. Suppose 90% is received by the employer, or some part has been in the policy, it has been written that some part needs to be transferred to the employee. So whatever amount employer will receive against the keyman insurance policy, that is going to be taxed as the employer PGBP. So the repayment of keyman insurance policy, if received by the employer, that is going to be taxed under PGBP head. If the amount has been received by employee, there would be two more circumstances or case. Either it would be received during service, or that is going to be received after service. If keyman insurance policy amount has been received by employee during service, that is going to be taxed under the head salary. In the heads of employee, this is going to be taxed under the head salary. If it is going to be received after service by employee, that is going to be taxed under income from other source. So if received by employer, taxability would be under PGBP. The amount received by employee during service, taxability under salary. And if it is after service, that is going to be taxed under income from other sources. Clear? Nidhi, ULIP means unit link insurance plan. Okay, under section 47. Superannuation funds are specific funds with like provident fund, etc. These are called superannuation fund. You can Google these things. What are the meaning of ULIP? What is superannuation fund? Superannuation fund must have been discussed with you under the head salary also. Because in case of salary, there are certain superannuation fund, recognized provident fund, unrecognized provident fund, statutory provident fund, superannuation fund, etc. 90% and 10%, the repayment. Suppose on the repayment of that policy, 10 lakh paid by the insurance company. And suppose out of 10 lakh, 9 lakh received by the employers. The provision I am discussing with you, whatever amount received by employer is going to be taxed under PGBP. And whatever amount has been received by the employee, suppose 1 lakh, it could be 90-10, it could be 95-5, depend upon the policy agreement. So whatever amount will receive by the employee, either is going to be taxed under salary head or income from other source. Okay, so keyman insurance policy. Any sum received under keyman insurance policy, we have discussed this. You can go through with the provision. Residual income, any income chargeable to tax under the act, but not falling under any other heads of income shall be charged to tax under income from other source. We all know about this. For example, salary received by MP, MLAs, members of parliament, members of legislative assembly, okay, will not be chargeable to income tax under the head salary, but will be chargeable as income from other source under section 56. However, the following incomes of members of parliament or state legislature will be exempt under section 1070. So there are certain incomes, those are exempted. Daily allowance exempted if they receive, constituency allowance received by MPs exempted, and constituency allowance of MLAs, those are 100% exempted. There are other certain exemptions. You might be remember in the starting of today's class, when I asked you that I am going to give you the overview of this chapter. So we have completed the deemed dividend provision. gift provision. This we have left, some received under LIP. There are some incomes, those are exempted under income from other source. We are discussing these income. Casual income we have already discussed. So income exempted under income from other source. So we have just seen some allowances like daily allowances, constituency allowances of MPs, MLAs are exempted. There are certain more incomes. Interest on money standing to the credit of individual in his NRE account. So if there is a non-resident who operate an NRE account in India, and if any interest is received by him, then that interest is exempt from tax. Like whatever we received under our saving bank account or FDR, that is taxable under Income Tax Act. But if a non-resident opens a NRE account in India, and if interest credit to his account, then that interest is going to be exempted under section 10(4)(2). You can go through with these provisions. Compensation received on account of disaster. Very important. It has been asked in the examination earlier. So the disaster means which is controlled by nature or which is uncontrolled, which we cannot control, which is beyond our control. So if there any disaster happen like flood, typhoon, hurricane, etc., and if government provides any compensation due to that disaster, whether by state government, central government, or local authority, that compensation is going to be exempted in the hands of receiver. But remember, only if that compensation received by central government, state government, or local authority. This clause exempt any amount received or receivable by an individual or his legal heir on account of disaster. Okay. Such compensation should be granted by the central government or a state government or a local authority. However, exemption would not be available in respect of compensation for alleviating any damage or loss which has already been allowed as deduction. So if you have already claimed deduction for any kind of compensation, suppose due to disaster, Mr. A building has been damaged. For that damaged building, he claimed deduction of rupees 5 lakh in his books of accounts. Later on, government provide 5 lakh rupees compensation. So if you already claimed the deduction for that loss, then this disaster compensation would be taxable. But if you have suffered a loss of 5 lakh rupees and did not claim any deduction in your books of accounts, then when you receive this 5 lakh rupees as a compensation, that is not going to be taxed. Okay. Disaster means we all know what is the meaning of disaster: catastrophic, mishap, calamity, etc. Substantial loss of life, suffering, etc. Which is beyond the coping capacity of community of the affected area. Now there is a question, read it carefully. Compensation on account of disaster received from a local authority by an individual or his legal heir is taxable. Examine the correctness of the statement with reference to the provision of the Act. So this compensation on account of disaster received from a local authority by an individual legal heir is taxable. Examine the correctness. So it is not taxable. The correctness is it is exempted. So statement is not correct because this compensation should be exempted. Clear? Educational scholarship, if you receive, that is not as an income, not going to be taxed. You can go through with this concept. Awards for literary, scientific, artistic work, and other awards by government. So if you receive any award which is approved by government, so that is going to be exempted. There is no taxability. Payment in commutation of pension received from a set up by LIC, section 10(10)(A), that is also going to be exempt. The question is here whether the interest income which is received by the bank is going to be taxed under income from other source or PGBP. We all know the interest income would be part of PGBP from the point of view of bank, whether it's for SLR or any other purpose. Now the tax rate applicability in case of different income. So they are casual income. In case of casual income, the rate of tax is fixed and that is 30%. We have already seen in capital gain last session that the casual incomes are going to be taxed at 30% and rebate can be claimed, but no deduction, no expenses, no loss. You cannot claim anything from your casual income as an expense. So applicability rate of tax in respect of casual income other than winning from any online game. The same provision is for online game also, right? So this section provides that income by way of winning from lotteries, crossword puzzles, race, including horse race, card game, and other games of any sort from gambling, betting, or any other form be taxed at 30% plus surcharge and 4% cess. The important thing to be remembered that you cannot claim anything as deduction from your casual income. Suppose if you participate in KBC and won 10 lakh rupees. And now you say that I have made certain expenditure for traveling. I went to for traveling for that KBC show to Mumbai. Then I've expended on the books I have purchased for the purpose of knowledge, etc. And my expenditure is 20,000. So is it going to be allowed? No. For casual income, no expenditure is allowed. Even if you have won a lottery ticket of 1 crore rupees and you purchase that lottery ticket for 10,000 rupees, even you cannot claim that 10,000 rupees expenditure out of your income. So in case of casual income, remember always, nothing can be reduced from your casual income. No expenditure or allowance can be allowed from such income. No expenditure allowance. Even you cannot claim any deduction from it. We have seen in the diagram that the deduction would be reduced from other income also, other income only, 80C to 80U. Basic exemption limit if remaining, even it cannot be used against casual income. We have already seen this because this is going to be taxed fixed. Suppose if I'll write a statement that casual income either could be positive or zero for all assessee. Is it true or false? If I write a statement that casual income either could be positive plus, that means there could be only income, or it could be nil only. Is it true or false? Or I can ask you that casual income cannot be negative in any way. So is this statement is true or false? That casual income in all cases either could be positive or nil. Magnitude means Nidhi impactful, like the earthquake magnitude, how impactful it was. Please do not ask these kind of general word. You need to Google it after the class. Okay. You will go through with the notes, and if there is any word you don't understand the meaning, because this does not correlate with the income tax. It's a general thing of magnitude. Nidhi is saying true. Ishan is saying false. It can be negative. Ishan is saying it can be negative as there could be loss. How it is possible to be loss, Ishan? Loss can be only allowed if there is expenditure exceeding the income. An expenditure we did not allow in case of casual income. Deduction we don't allow in case of casual income. Basic assumption limit we cannot claim against casual income. So how there could be negativity? So the statement is true. Either it would be plus, like I do not earn anything via casual income this year, so my income would be zero. And if I won any lottery or any kind of casual income, then my income would be positive. Because you cannot reduce anything, so there could not be loss anyhow. Mr. Anil is asking, sir, in case assessee lost lottery fee, can he show as negative balance? You cannot claim expenditure. Even you purchase that lottery ticket, you cannot claim the expense of purchasing lottery ticket. If I cannot reduce anything from my any of income, so there cannot be any negative income. There will be always zero or plus. How negative is possible? Suppose not possible. Okay. Now the second section of, again for casual income, which is from winning from online games, etc. Just a second. The same rate, the same concept is here. The section provides that the net winning from any online game would be taxed at 30% and 4%. Meaning of online game, same concept, no reduction, no expenditure, no deduction, no expenses, no exemption limit can be utilized. Now, what are the expenses allowed when we earn income from other source? That is the topic. I have explained you the starting of the class that we are going to discuss these topics. Deemed dividend we have completed, gifts provision we have completed, incomes, certain incomes are exempted, we have completed, casual incomes completed. Now we are on this topic. Certain expenses allowed and disallowed under income from other sources. Okay. Third point is only remaining after completing these points. So these are more likely PGBP provision. There are certain expenditure which are disallowed under PGBP. So in the same case, Jayendra asking net winning means losses can be set off. No, losses cannot be set off in any case. Net winning means if you earn 10 rupees, 20 rupees, then whatever your net winning in a single game, if you have make 5 bets, so the aggregate of all these net betting, that is going to be taxed as your income. So the income chargeable under that income from other source shall be computed after making the following deduction. Mohit is asking, means while calculating PGBP income, then should be ignored and take that point in calculation of capital gain while solve computation of income. No, you have transferred your stock in trade. So this stamp duty value concept you have to take in your PGBP only. Because in the case your question you have asked, the question is from the builder point of view. And the property you are talking about, I am assuming it as a stock in trade. So if stock in trade has been transferred, because you have said it is section 43CA that is applicable on stock in trade. So Mohit, when stock in trade has been transferred, the stamp duty value we need to take as per agreement date or registered transfer date, the deed of transfer has been registered, depending upon the advance he has received, whether in online mode or account pay check or cash. If online mode is there, then we have to take the agreement date stamp duty value for the purpose of PGBP. And if it is no receipt of online mode amount, the amount has been received in cash, then we have to take the stamp duty value at the time of transfer deed registered. Arun Kumar asking, from interest from post office saving, can we claim both section 1015 exemption and 80C deduction? Yes, Arun Kumar, we can claim it, of course. The deduction also we can claim. An exemption means up to this amount that is exempted. This amount will not be treated as your income. Against the excess amount, if that is a saving bank account, etc., then you can claim the deduction also, if the deduction applicable. Okay, 80TT, 80TB, we will discuss it. So deductions allowable. First one is very important because it's different. In case of dividend, other than deemed dividend arise on account of buyback of share of a domestic company. Why? Because against deemed dividend, no expenses allowed. So except on buyback of shares deemed dividend, in case of other dividend or income in respect of units of a mutual fund or income of respect of units of a specified company. interest to earn such income is allowed as deduction, but maximum up to 20%. So if you have taken loan from some organization and from that amount of loan you invested into shares and earned dividend, then maximum 20% interest you can claim as an expenditure. More than that, you cannot claim expenditure in any case. No deduction in respect of any expenditure is allowed in case of deemed dividend arise on account of buyback of shares by a domestic company. In case interest on security, any reasonable sum, you have to prove, in these cases, you have to prove that the expenditure I am claiming is connected to my income up to a certain or reasonable basis. You have to produce the documents. The commission you paid, the remuneration you paid to a banker or any other person for the purpose of realizing such interest on behalf of assessor. So you can go through with these provisions. These are general provision. Income consists of recovery from employee as contribution to any provident fund, etc. Next is where the income to be charged under this head is from letting on hire of machinery, plant and furniture with or without having buildings. So if that interest income does not fall under PGBP, if it does fall under income from other source, you can claim these expenditure. These are as same as if you would have claimed under your PGBP if that income is going to be taxed under PGBP. The amount paid on current repairs, insurance, etc., and depreciation. So you can claim the depreciation also if these income does fall under income from other source, which is connected to rental income of machinery, plant, and furniture with or without building. So if you receive the rent from these assets, you can claim these expenditure respectively out of this rental income, and it will taxable under income from other source if it does not charge under PGBP head. The pension concept is important because it is having two exemption limit depending upon the regime you follow, whether you are under a default tax regime or under optional tax regime. This is about family pension. A deduction of a sum equal to 33 by 1/3, that means 33.33%, 1/3 of such income, or 15,000 in case of optional regime, or 25,000 in case of default tax regime. So if it is a family pension, and if you are following optional tax regime, then the exemption is 1/3 or 15,000, 1/3 of pension or 15,000, whichever is lower. You can claim that as an expenditure, you can say, not exemption. If you are under default tax regime, then it's 1/3 or 25,000, whichever is low. Clear? Please go through this provision also. There are certain pension which are exempted if it is under section 1090 or 1080. For Paramveer Chakra, etc., Veer Chakra, in case of those cases, these pensions are fully exempted. Family pensions are completely exempted. So please kindly go through with these provisions. So whatever I'm giving you as a homework, what I'm asking you to please go through, the reason is behind because we have a chapter of like 50, 60 or 70 pages and we have to cover it in 2 sessions. So it won't be possible for me that we have to read each and everything in very detail. So whatever point I feel that is general point, there is no technicality involved there. So I ask you, please go through that point. If there is any query, you can ask me in the next session. But you have to follow what we ask you to do. Like a very small story. एक बार गौतम बुद्ध भगवान जो थे वो एक गांव में आए. उस गांव में एक पर्सन रहता था और वो जानना चाहता था उसकी लाइफ का ऑब्जेक्टिव क्या है. वो खुश रहना चाहता था बट उतना खुश नहीं रहता था. उसके पास काम भी था, फैमिली भी थी, बट ही वांट्स टू नो कि व्हाट इज द पर्पस ऑफ माय लाइफ, व्हाट इज द ऑब्जेक्टिव ऑफ माय लाइफ. जब गौतम बुद्ध जी उस गांव में पहुंचे तो लोगों ने उससे कहा कि गौतम बुद्ध जी का 30 दिन का 30 डेज का एक सत्संग है जहां पर वो बताएंगे कि लाइफ को कैसे जीना चाहिए. सबने उसको बोला कि वहां जाओ और सुनो, उससे जो तुम्हारी प्रॉब्लम है कि व्हाट इज ऑब्जेक्ट ऑफ योर लाइफ, व्हाट इज द पर्पस ऑफ योर लाइफ, हाउ टू बिकम मोर हैप्पी, एटसेट्रा, वो बताएंगे और समझ आएगा. उसको लगा ठीक है मैं जाता हूँ। वो गया उनकी सभा में। एक दिन निकला, 2 दिन निकला, 10 दिन निकले, उसको अपनी लाइफ में कोई चेंज नहीं लगा। 15 दिन हुए, 20 दिन हुए, उसको स्टिल लगा कि मेरी लाइफ सेम है। तो बहुत परेशान हो गया कि 20 दिन हो गए, 10 दिन बाद ये सभा खत्म हो जाएगी, प्रवचन फिनिश हो जाएंगे, मेरी लाइफ में कोई चेंज नहीं हुई। तो 20 दिन बाद वो बड़ी मुश्किल से, बड़ी मेहनत से गौतम बुद्ध जी के पास पहुंचा और उनसे पूछा कि प्रभु मेरी ये प्रॉब्लम है कि मेरे को अपनी लाइफ का पर्पस नहीं पता, मैं कैसे और खुश रहूं, मेरी लाइफ ठीक है, पैसा भी है, फैमिली भी है, सब कुछ ठीक है, बट आई वॉन्ट टू बी मोर हैप्पी, और मैं चाहता हूँ कि मुझे पता चले ऑब्जेक्ट क्या है लाइफ का। और सबने कहा था कि आपके लेक्चर जब सुनेंगे तो समझ आ जाएगा। 20 दिन हो गए, मेरे को अभी तक कुछ भी नहीं समझ आया, माई लाइफ इज एग्जैक्टली द सेम। गौतम बुद्ध जी ने उससे कहा अच्छा एक काम करो, आज यहां से जाओ, और जब आज से जाने के बाद कल वापस आओगे तो मुझे बताना कि पूरे दिन में तुमने क्या क्या देखा, क्या क्या देखा मुझे ये बताना, फिर देखते हैं क्या हो। तो वो गया, उसने पूरे रास्ते में जब वो जा रहा था उसने सब देखा, घर पहुंचा, फिर उसके बाद जब नेक्स्ट डे लौट कर आया, सभा खत्म हुई, दोबारा से पहुंचा कि देख लिया सर मैंने पूरे एक दिन में क्या क्या हुआ, तो बताओ क्या क्या देखा। उसने कहा मैंने देखा कि जब मैं यहाँ से जा रहा था तो एक बूढ़ा आदमी था, उसको हेल्प चाहिए थी, बहुत भारी वेट लेके जा रहा था वो अपने तांगे पर। अच्छा और क्या देखा कि एक एनिमल था, उसको बहुत भूख लगी थी तो वो खाना ढूंढ रहा था। और क्या देखा कि एक जगह कुछ लोग मिलके एक पर आदमी को परेशान कर रहे थे, सब लोग बुली कर रहे थे एक इंसान को। कि और क्या देखा, उसने कहा मैं घर गया तो मैंने देखा कि मेरे घर के पास बहुत सारी बर्ड्स हैं, वो बर्ड्स को खाना नहीं मिल रहा, चिड़ियों को। उसने कहा और क्या देखा, मैंने देखा कि जब मैं लौट कर आया नेक्स्ट डे तो मैंने देखा कि कुछ लोग एक आदमी का सामान छीन के भाग रहे थे। अच्छा तो इतना सब देखा, उसने कहा "हाँ, मैंने सब देखा"। उसने कहा जब मैंने पिछले 20 डेज के लेक्चर में समझाया तो उससे क्या समझे। मैंने हर लेक्चर में ये बताया कि जब किसी को आपकी जरूरत हो, जब कोई परेशानी में हो, जब किसी की प्रॉब्लम आप सॉल्व कर सकते हो, जब आपके पास को सॉल्व करने का चांस हो, तो आपको वो करना चाहिए। तो जो मैं बोल रहा हूं पिछले 20 दिन से, आप उसे सिर्फ सुन रहे हैं, उसको इम्प्लीमेंट तो कर ही नहीं रहे। जब उस ओल्ड पर्सन को हेल्प चाहिए थी अपना टांगा खींचने में, तुमने उसकी हेल्प क्यों नहीं करी। मैंने तो कहा था कि जब किसी को जरूरत हो तो हेल्प करनी है। जब किसी एनिमल को खाना चाहिए था और तुम्हारे पास घर में था तो तुमने क्यों नहीं दिया, बर्ड्स को क्यों नहीं दिया। जब लोग एक आदमी को परेशान कर रहे थे गलत तरीके से तो उसकी हेल्प करने क्यों नहीं गए, ये सब कर सकते थे, यू आर एबल टू डू, बट तुमने नहीं किया। तो लाइफ चेंज होगी कैसे। तो 20 दिन से मैं जो बता रहा हूं वो सुन रहे, सुनने से नहीं। मैंने तो 20 दिन में कहा कि जब किसी को जरूरत हो तो करो, तो आपने वो डू वाला काम तो किया ही नहीं ना। तो जब करोगे तभी तो वो चीज इंप्लीमेंट होके चेंज होगी, जिस चेंज के लिए मैं कह रहा हूं। उस पर्सन को ये बात समझ आई, फिर उसने करना शुरू करा। जब उसे जरूरत, किसी को जरूरत होती थी उसकी हेल्प की और वो कर सकता था, उसने करना शुरू करा एंड ही स्टार्ट बिकेम मोर हैप्पी। उसको लाइफ का अपनी पर्पस मिला कि लाइफ का पर्पस ये है कि हम जिसकी हेल्प कर सकते हैं उसकी हेल्प करें। इन द सेम वे, तो जब फैकल्टीज आपसे कहते हैं, कोऑर्डिनेटर आपसे कहते हैं कि पढ़ाई ऐसे करनी है, इफ आई एम आस्किंग यू कि बच्चों प्लीज गो थ्रू विद दीज प्रोविजन व्हाट आई एम मार्किंग फॉर यू, और प्लीज डू योर होमवर्क, प्लीज सेक्रीफाइस योर पार्टीज एटसेट्रा, बी फोकस, तो हम लोग आपसे बोल रहे हैं, आप सुन रहे हैं, बट दैट इज नॉट इनफ। until you will implement it, you will not get the result what you desire to have. देन यू विल से कि अरे मैं तो सारे क्लासेस भी ले रहा हूँ, मैं तो सारे, अब पूरी जितनी भी क्लास होती है स्टार्टिंग से एकदम रात तक सारे लेक्चर सुनता हूँ ऑनलाइन, जो भी मुझसे कहा जाता है मैं सब सुनता हूँ। तो इट्स नॉट अबाउट इट्स यू आर हियरिंग ओनली, यू हैव टू इम्प्लीमेंट। अगर होमवर्क मिल रहा है आपसे, हम बार बार कहते हैं, और मैंने देखा है कि बीओएस कोऑर्डिनेटर्स भी बार बार कहते हैं कि प्लीज मॉक टेस्ट सीरीज दीजिए, प्लीज आरटीपी सॉल्व कीजिए, प्लीज जो पास्ट ईयर एग्जामिनेशन क्वेश्चन है उन्हें ट्राई कीजिए। तो आपने सुन लिया, बट दैट्स नॉट द एंड। एंड लेट मी टेल यू वेरी फ्रेंकली, आप में से जो जो बच्चा उसको इंप्लीमेंट कर रहा है, ही और शी विल गेट द रिजल्ट, ही और शी विल गेट द डिजायर रिजल्ट। सो यू हैव टू implement things. Listening is not enough. Listening and implement it, it's very important. Okay, so that was the story for all of you. Okay, so moving on to point number 6, any other expenses not being in the nature of capital expenditure. So we cannot claim capital expenditure. We can claim the depreciation on it. as an expenditure, but capital expenditure cannot be claimed from earning any income. Point number 7, we have gone through with this point, that is interest on compensation, original or enhanced compensation. So deduction of 50% on such income, no deduction would be allowed under any other clause of section 57 in respect of such income. These all illustration we will solve together in our next session. The homework I have given you in deemed dividend case, or the homework I have asked you to do to go through with certain provision, the definition of relative, etc. Please follow that. Deductions not allowable. And now you will see these are almost those provisions what you have gone through under PGBP. So no deduction shall be made in computing the income from other source of an assessee in respect of following items of expenses. You cannot claim personal expenditure. Under PGBP also you must have gone through with this. I guess section 37 one explain that you cannot claim personal expenditure out of any income. If interest chargeable to tax and which is payable outside India, on which tax has not been paid or deducted at source. So you cannot claim that interest as an expenditure if that has been paid outside India and TDS has not been deducted. The same provision was in PGBP also. If you have paid any kind of salary and if it is payable outside India, you cannot claim it as an expenditure unless the TDS has been deducted. Same concept like PGBP. Again, same concept, you cannot pay 10,000, more than 10,000 or 35,000 to any person in a single day. If it has been done, then in that situation, the expenses would be disallowed. There was a provision under PGBP also that if you are making payment to any specified person, which is your relative, etc., and if it is exceeding the FMV in the opinion of AO, the excess would be disallowed. You can see this provision also here. If you are paying to a related person and it is excess of FMV, then that excess is going to be disallowed. And this is regarding the cash payment also. In the same case, PGBP, if the payment has been made to a resident and TDS has not been deducted up to the due date of ROI, then 30% of this expenditure would not be allowed as your expense. 70% is allowed, but 30% would be disallowed. The balance 30% would be allowed as deduction in the year TDS has been deposited and deducted. Clear? No deduction in respect of any expenditure, again, incurred in connection with casual income. Whether it's an expenses, you cannot claim it. Whether there is deduction, you cannot claim it. Whether there is basic exemption limit, you cannot claim it. And set off also you cannot do. The set off chapter we will discuss later, but let me tell you, against capital gain income, casual income, against casual income, no loss of any other head also can be adjusted. No loss can be adjusted. So no basic exemption limit, no set off adjustment allowed, no deduction allowed, no expenditure allowed. But only one benefit is there, which can reduce your tax liability. Do you remember which benefit is there in case of casual income, which can reduce your tax liability? But these are not expenses, deduction, basic exemption, and set off. But one benefit is there, and I have explained you in the capital gain last session that this benefit can be claimed against casual income. Which was that? Anyone remember? Which benefit we can have in case of casual income, which can reduce our tax liability? Anyone remember which benefit we can have? No deduction, no expenditure. Anil is saying unexhausted basic exemption limit. No. I have written over here, basic exemption limit, not allowed. Deduction, not allowed. Expenditure, not allowed. Set off, not allowed. There's something else which can Reduce. Yes, Titender is absolutely right. Well done. It's rebate. Rebate is allowed. Pooja, wrong answer. Deduction not allowed. Rebate is allowed. Rebate is allowed. Rebate is not allowed from 112A, capital gain, long term. But rebate is allowed against casual income. This is the benefit you can claim. Okay? Sure. Well done. Deemed income chargeable to tax. The provision of section 41(1) says that if you claim anything, any loss under income from other source, any expenditure or liability, and subsequently any amount is received or benefit is derived in respect of such expenditure incurred or loss or trading liability allowed as deduction, then it shall be deemed as income in the year in which the amount is received or the benefit is accrued. Suppose you have claimed any kind of loss. Suppose there is income from other source, 10 lakh rupees, and you have claimed 1.5 lakh rupees interest as expenditure. So taxability is 8.5 lakh. Now, suppose the expenditure you have paid to someone, he has repaid that expenditure to you. You have claimed this expenditure on due basis. Suppose you have claimed this expenditure on due basis. Clear? And after certain time, you realize that now this expenditure need not to be paid because the person to whom you need to pay it has passed away. So he is not going to come and collect these amount from you. On the due basis, you have claimed it, but in future, this liability has been end of. Then this kind of expenditure you have claimed, but in the future, if this expenditure or liability has been ceased to arise, in that case, that is going to be treated as your income. Let me explain you from the point of view of PGBP. Like you have purchased 1 lakh rupees goods on credit. Suppose you purchase these goods on credit, so you have claimed expenditure of 1 lakh rupees. And after that expenditure and all income, etc., suppose your net profit is 10 lakh. This credit purchase of 1 lakh will create in balance sheet your creditor. There would be 1 lakh rupees creditor there, so we have to pay that person in future. Now suppose this creditor has been passed away and you need not to pay this 1 lakh rupees in future. So this is called your trading liability ceased to exist. This is your trading liability which has been ceased to exist. So if this creditor we do not need to pay in future, this is going to be your business income in the year this liability ceased to exist. In the same case, if we need to pay, if we have claimed any expenditure on due basis, and after certain time, we came to know that this liability has been ceased to exist. That means we do not need to pay that person. So that is going to be your income from other source in which that benefit has arisen. These was the income from other source provision we have gone through. And I have asked you to do some homework yourself, some questions and some provisions also. So we are having left with only that LIC provisions, what we need to discuss in next class, and we will go through with the examples also and test your knowledge question also. So students, if you have any query, kindly ask. This income from other source chapter is very simple in my opinion. Very simple incomes are there, like gift provisions are there and deemed dividend. Everything else is very simplified and separate questions. So kindly go through with these provisions and you can ask me any query if you have. And I believe whatever has been suggested to you by the faculty, by the Board of Studies coordinator, etc., you should implement them in your studies. So that will give you maximum benefit or the result you are actually desired. No query yet. I guess there is no query on the portal also and not in chat box. So Mr. Manish ji, can we close the session? Yes, over. Thank you. Thank you so much. Good night.